than the pre-COVID 3-year average. And that is the fear which is playing out in the market's mind. Dipan Mehta of Elixir Equities is now with us on the show. Dipan, what would be the key triggers that you would watch for which will help you make a decision on whether growth is going to slow down further for the IT companies?
See, Rima, good afternoon and thank you for having me on your show. You covered it so well that there's hardly anything to contribute over here. But one thing which rings with me is, of course, we'll be asking the managements how the deal flow is and what are the sort of IT spending, how it's going to shape up. Because that really is the critical question over here. December anyway is a weak quarter, a lot of furloughs are there, holidays are there, and a weak Q3 is more or less priced in. But let's see what the managements have to say in terms of how the demand is shaping up and how the kind of order flows are coming through, and which are the discretionary spends and which are the projects which managements, which global Fortune 500 companies are cutting back on, and what's the bare minimum that they want to spend. So it's a bit of an uncertain period for tech companies, and I wouldn't want to either buy or sell at these levels. I think the time to sell certainly is gone, and you may see them correcting by another 10-15% or so, but nobody really gets the bottom as well. So just remain invested. I think we have to wait out these difficult times for the industry. And once the global markets, the global economy settles down and IT spending comes back fast, then these stocks again will just start to rebound. And trying to catch the bottoms is always very difficult in tech stocks per se.
All right, and another data point just to put out for our viewers, TCS last year was down close to around 13%. In a single year, that's the largest fall that we have seen on TCS. The last time it fell more than 13% in a single year was 2008. So that's the kind of damage that we saw on a stock like TCS, in the past year. But Dipan, the markets are looking a little bit jittery, but a couple of stocks are doing well. Astral as well as Havells, both of them are up and about. Any view on any of these two names?
See, Nigel, Astral is benefiting from the way the PVC prices have corrected. And demand is coming back very strong. I think even Supreme Industries management said the demand is exceptionally strong for PVC pipes. And that's because of all the government schemes and overall rural spending. And of course, construction, real estate picking up augurs very well for Astral and Supreme Industries and some of the other PVC pipe manufacturers. And it's been a bit of an underperformer, Astral per se. And I think we're seeing some sort of a catch up over there. Also, I think with Astral, the adhesive business should do much better this quarter onwards, because the raw material spikes which took place earlier in the year, I think all of those have been neutralized. We've seen a price correction over there, and management also has taken price action in terms of increasing marginally the end product prices. Valuations are on the higher side, but it's been a fabulous wealth creator and a very aggressive company, very aggressive management plans as well. And the way they moved from CPVC to a whole host of new products within the building material space is quite impressive. I wouldn't want to buy at these levels, but I think if you are invested, best to remain invested and ride this up move.
I got that. Dipan, hi, afternoon. Anything else looking interesting in this fall?
No, Prashant, I think more and more I'm convinced that growth stocks may come back in 2023, and a whole host of new listings have taken place in the retail, specialty retail side. We're very positive on all of those. I know they're expensive. I know they are a bit discovered, but nonetheless, I think they have a fabulous runway for growth. And usual disclosure that we and our clients are invested, companies like Vedant Fashion, Go Colors, Campus Activewear, Metro Brands, Ethos. I think all of these are companies which are on top of our watch list. And we're seeing how these numbers shape up for Q3. It's going to be a good quarter for these companies, considering the way the festive season has played out. And I think that if the earnings are beyond our expectations and because of higher EPS, we see a marginal decline in the P ratios, then that could be a good entry point for these companies. You could buy individual stocks or buy them as a basket. But all of these companies have got a great runway for growth in terms of expanding their retail network, and balance sheets are strong. So there's no need to dip into any debt when they keep on expanding or setting up new stores.
Okay, all right, Dipan, got that. Stay on with us. Before we slip into a short break, just want to point out a couple of stocks. Bajaj Auto has made a bit of an uptake. Just pull up the intraday chart out there. Bajaj Auto has taken off, revving the engine, it seems. But I think in the final hour of trade, if we need to see a recovery, two stocks to look at. One is Reliance Industries. There's a bit of a bounce that we've seen out there. So can it fight for the bulls? Important on that one, since the Nifty Bank is off color. And ITC. Just keep an eye out on both these two names. Let's see whether or not they can pop up from the day's low. For the time being, we'll slip into a short break. You come back, we'll discuss a few more stocks. We'll also get in our alpha managers. Of the day, we'll have Charandeep Singh as well as Varun Daga of Girik Capital who'll be joining in.